Known as the Oracle of Omaha, Warren Buffett is one of the most revered investors in the world. With a net worth of over $100 billion, he's a name that's synonymous with financial success. His story is not just one of wealth, but of patience, wisdom, and a unique approach to building an empire that has lasted decades. But how did this modest man from a small town in Nebraska rise to become one of the richest people on the planet? Warren Edward Buffett was born on August 30th, 1930 in Omaha, Nebraska, during the Great Depression. Raised in a middle-class family that valued education and hard work, Buffett's father, Howard, was a stockbroker and U.S. congressman, and his mother, Layla, was a homemaker. From a young age, Buffett had an affinity for numbers and a keen interest in business. As a child, Warren displayed an entrepreneurial spirit. At just 6 years old, he started his first business venture, selling chewing gum door to door. By age 11, he had already bought his first stock, 3 shares of City's Service Preferred for $38 each. Though he sold them at a small profit, this would set the stage for his lifelong passion for investing. Buffett attended the University of Nebraska, where he earned a degree in business. But it was at Columbia Business School where his life would truly change. There, he studied under Benjamin Graham, the father of value investing, a strategy focused on buying undervalued stocks and holding them for the long term. This philosophy would become the cornerstone of Buffett's career. Graham's teachings on the importance of patience and discipline in investing resonated deeply with Buffett. After graduation, Buffett worked for Graham's investment partnership, where he honed his skills and developed a sharp eye for value. But he was ready to strike out on his own. In 1956, Warren returned to Omaha and started his own investment firm, Buffett Partnership Limited. He began to invest in undervalued companies, and in 1962, he took control of a struggling textile company called Berkshire Hathaway. At the time, Berkshire was a dying business, but Buffett saw potential. He began using it as a vehicle to acquire other businesses, eventually shifting focus away from textiles to insurance, retail, and manufacturing. Buffett's key insight was his ability to find companies with strong potential, competent management, and solid fundamentals, companies that were undervalued by the market. Buffett's big break came in the 1960s when he began to attract attention from investors who were impressed by his returns. They started to take notice of his unique approach to value investing, which focused on buying companies with strong fundamentals at discounted prices. By 1965, Berkshire Hathaway had grown significantly, and Buffett was now in full control. Under his leadership, the company began to flourish. Buffett's investment philosophy was simple: buy companies with strong, predictable earnings and hold them forever. One of the key strategies that Buffett employed was his concept of a margin of safety. This involved buying companies at a price significantly below their true value, providing a buffer against potential losses. By doing so, Buffett was able to minimize his risks and maximize his returns over time. This approach led him to acquire beloved brands like See's Candies, Dairy Queen, and Geico. He believed in the power of compounding, and his long-term approach to investing would pay off handsomely. Buffett famously said, "Our favorite holding period is forever." This patience allowed him to ride out market fluctuations and reap the benefits of long-term growth. While many investors were focused on short-term gains, Buffett remained focused on the big picture: value, growth, and trust in the companies he invested in. As the years passed, Buffett's fortune grew. By 1983, his net worth had surpassed $1 billion, making him one of the wealthiest men in America. His philosophy of buying strong, reliable companies and his ability to consistently make sound investments set him apart from the rest of Wall Street. With Berkshire Hathaway's stock price skyrocketing, Buffett had cemented his place as one of the world's richest individuals. Today, Berkshire Hathaway is a sprawling conglomerate, owning over 60 businesses and holding large stakes in publicly traded companies like Apple, Coca-Cola, and American Express. Buffett's wealth is now valued at over $110 billion, and he continues to serve as the chairman and CEO of the company. While Buffett's fortune is enormous, he is perhaps just as famous for his philanthropy. In 2006, Buffett announced that he would donate the majority of his wealth to charity, pledging to give away 99% of his fortune during his lifetime. He co-founded the Giving Pledge with Bill Gates, encouraging other billionaires to pledge the majority of their wealth to causes that benefit society. Buffett's charitable donations are staggering, amounting to tens of billions of dollars. His contributions focus on education, healthcare, and poverty alleviation, and his giving philosophy is simple: to do more good in the world. Warren Buffett's influence extends far beyond his wealth. He is known for his humility, his common-sense approach to investing, and his unwavering commitment to ethical business practices. While many people admire his financial success, it's his wisdom and generosity that have made him a respected figure in business and beyond. Buffett is not just a businessman. He's a mentor, a philanthropist, and a family man. His success story is a testament to the power of patience, discipline, and integrity. At 93 years old, Warren Buffett is still active in his work, and his legacy will undoubtedly influence future generations of investors. From a young boy with a passion for numbers to a financial titan who reshaped the world of investing, Warren Buffett's journey is one of perseverance, insight, and generosity. His story reminds us that success is built not just on wealth, but on the values that guide us along the way. Thanks for watching. Stay tuned for more stories of history's most influential figures.